Hi there, it's Bill with Smart Trades, and it's October 7th around 12:30 p.m. Pacific time. And let's start off with a review of the S&P. As always, if you'd like more frequent updates or more detailed analysis, please visit smarttrades.com. Anyway, this is the account that I've worked with for some time. I've mentioned it in previous reports, and I'll be the first to admit it's a little bit of a stretch. But I think that it accommodates many of the shorter term patterns better than some of the alternate more bearish counts. And indeed, here is one of those alternate more bearish counts. And as you can see, a lot of folks are counting. You've probably heard these counts. They're counting this as an impulse down, 1, 2, 3, 4, 5. Perhaps counting this as an expanding triangle fifth wave. It's certainly possible. One of the major flaws in this count, in my opinion, is that the wave 3 down counts best as a three-wave structure. 1, 2, 3. Pretty clear. Also, this first wave down is a bit problematic. It is possible to count this as a five-wave structure. 1, 2, 1, 2, 3, 4, 3, 4, 5. However, internally here, as you can see, some of these so-called impulse waves down have three-wave structures themselves. So, again, the problem that I have here is that basically this pattern off of the highs is flawed. When you look at the Nasdaq, you can see it's a somewhat different pattern in that we made a new high in July. From there, you do have a nice impulse wave down. You can count that as 1 or A. And from there back up, what I think is A up, and then a clear ABC down to the recent lows. Now let's compare that. Folks are calling this an impulse wave, but again, on the Nasdaq, I think it's quite clear that indeed is a three-wave and should be counted as a corrective pattern. So, with that said, I question that this indeed is an impulse to a new low. Here is a chart that I actually posted earlier today, and at about just after 7 a.m. I posted on Twitter that we had breadth ratios rolling over. I thought we'd see a bit of a pullback today, albeit a short corrective one, and indeed that's worked out. If you would like these updates in real time, please go to smarttrades.com. Here's the TLT chart posted in the last report on the 4th. We have had what looks like an impulse down off of the highs. Here's the TLT 30-minute chart. There's other counts that you can use for this decline, but the bottom line is it does look impulsive. Now, here's a way that I trade these turns, try to limit risk. This is the TBT, which is the short bond vehicle, and off of that turn, we had a nice impulse up, in my opinion, what I think is a corrective pattern down. The idea here, when you see these kind of 1-2s, a high or low, this offers a nice place to possibly get long and or basically short the bonds, and you buy the breakout of the wave 1 high or some particular area within this pattern to the downside, and you place your stop under the wave 2 low. In this case, your risk is under 2% if you did that, and with a potential reward of about 10% to the upside as we rallied all the way up to 2050 from a low down around 18. And back to that long-term chart on the S&P. Again, ideally, I'm thinking we could get back to the 1250 area, give or take. And one of the things that I think is important about this count is to note that we do have a relationship between this first leg down labeled A. This C leg, if you count the way I have here, is 2.62, almost on the nose on this low back in August. And with a little more detail, again, to me, I count the decline from the late August, September high as a series of ABCs, probably a zigzag for B, and that 1.62 times A would target up around the 1280 area. I don't know if we're going to get that high, but it's been said that criminals like to return to the scene of the crime. Well, if you'll remember, we had some information shared with various insiders, according to S&P. Prior to the announcement to the public, the S&P at that time was up in that 1280 area, or perhaps 1260 if depending on when the actual information was leaked. Check out CNN transcripts back on August 5th, and you'll see that S&P actually admits to sharing information with folks on Wall Street ahead of their announcement to the public. And the only question is not if they shared that information. They admit to doing so. It's a question of when. And like I say, it's right in this area here, probably between 1260 and 1280. And that also comes out to the 1.62 times A. So we'd have basically a retest of the apex of that old triangle at around 1280. I'm by no means sure we're going to get that high. I think that anything above 1230, gets my attention here, particularly if you have a completed 5-wave structure to the upside. And again, I think that the major message here is that from the late August peak, I think we best count as a series of ABCs down. You can see the symmetry here between the A and C waves. Likewise, in the second segment, you have very similar A and C waves, and then what appears to be, at least so far, an impulse back up off of the October 4th low. Anyway, hopefully that all makes sense. In the last report, some folks said that I wasn't clear in terms of my opinion. I went back and actually checked, and on 23 different occasions I mentioned that I was either bullish, or that we were testing support, that we were putting in a corrective decline, or that we were going to rally back up to the 1250 area in my expectation. Anyway, we shall see. One caution here: if we do take out the 1075 level, this count is obviously broken and comes into question, and we shall see. However, if we have corrective declines that hold above there, the count that I have here is favored. A rally through 1200, I think, adds further confirmation. It doesn't actually prove that this count is going to work out, but it increases the probability that we are going to go higher up above 1230 first. And again, the main thing I would look for here is a corrective decline that bottoms above the 1075 area. Thanks so much for watching. Hope you're having a great week, and enjoy your weekend. Bye-bye.